Greetings, members one and all of the Salivation Nation, analyzing the 7 silver bull markets. Let's explore! It's not too often that you will see a silver infographic these days, or a gold infographic for that matter, or really anything related to precious metals. But I think we might start to see more of them as interest is starting to pick back up again in the precious metals. It is fascinating indeed, and this one analyzes the 6 silver bulls. There's been that number since the 1960s, and we are in the midst of one right now, known as the 7th bull market. And the infographic here talks about how silver has always had intrinsic value in human history, and it continues to provide security in volatile financial markets. Now, notwithstanding, silver in and of itself is volatile and really has been for quite some time compared to gold. And even really gold is volatile these days, as I talked about in a previous recent video here. But nonetheless, the long-term outlook for both these metals is good, and they do preserve your wealth, especially gold. So that is kind of the nexus that we're looking at here as we analyze these markets and these bull runs here in this infographic. Very fascinating indeed. Now, what you're looking at here is you have a legend here that shows the silver bulls, and it graphically shows all 6 of them according to the nominal price and the inflation-adjusted price. Now, I'm not sure exactly how they're calculating the inflation-adjusted price because these numbers seem a little bit low, even when they're inflation-adjusted. But there are several different metrics that are utilized to calculate, and they're probably using a relatively conservative metric, especially when we look at the highs from 2011 there. There's not much difference between the two, inflation adjusted and nominal price. But let's go back down here to the late 60s, and the very first one, the inflation adjusted price, which number we'll use, but it's good to see the difference between the two, because you can see that it is really widely gapped between the year 2000 all the way back to the 60s and into the 50s here. The first one was inflation adjusted for $18.58. So it's pretty interesting to see. We're obviously above that now, but it is fascinating to see that movement up there in that little bull, a little micro bull market there, I would call that. And then, or maybe a mini bull market, because the micro is coming later. The number 2 got up to $70 and $30.70 in the mid-70s. That's probably during the oil crisis. That's probably petrodollar era and the after effects of tying the dollar to the petrol and a little bit of concern during inflation times, massive inflation during that period. And then we had the Hunt brothers cornering the silver market in 1980, and look at that. That was about $50 an ounce for the nominal price, but it got up, when you adjust it for inflation, it's double that, $118.50. We've not seen anything like that since. And it was for a very short amount of time. These bull markets, you'll notice that these bulls only last for a very short amount of time. That is the one thing, which is why, and we'll talk about that as we get closer to the end here, as far as buying silver at high prices. But nonetheless, you could really apply that to some degree to gold as well. But here, the 4th bull market was another mini bull market. There it is at $17.50, inflation adjusted. So that was a very tiny one. Why this one was not counted in the early to mid 80s, I'm not sure why, because that's a much bigger little market there. That's very strange that that's not showing. And that leads us to number 5, which is barely even noticeable. Why are they even including that? And that must be related to inflation. It doesn't give me what this means here, if that's inflation adjusted. But I don't think that's an inflation period, though, there. So I'm not really sure what that means, these little dots here going up. but that got down to $9. Silver remained very, very flat and low, adjusted for inflation and nominally from that point on time. Whereas here, it's kind of all over the place, even though there wasn't much of a real price movement here. Very interesting and strange how they calculate these. It kind of doesn't make sense with this graph. A very, very thick one here from this big climb up here. And I guess maybe they're measuring the lows to the highs. I don't know, but it's very strange how that shape is moving across, because you see it comes across several different peaks here, although here it's coming from a low to a high. Maybe we'll see below exactly what that's about. But anyways, the last real big one is inflation adjusted, got to $49.50. It was not that much lower in real price, nominal price. And then for the seventh one, we see it go from peak to peak again. And I think that was when it was about $21 or so an ounce. And now it's down up to $24.30 for the seventh peak there. That sixth peak was that big one here. And that's when the Federal Reserve ends its second quantitative easing program. But then it started the third round. And now we are well into the fourth. And so it's ongoing here. So now we see these numbered areas. And let's take a look here from 67 to 68. It was a 48% increase from $12.50 to $18.58, inflation adjusted, for 13 months. And I guess that's what that span of period is there. And that's what those dots mean there, I guess. Number two, from 71 to 74, it was 27 months. 845 to 3159. Very interesting indeed. A 274% increase. Number three was the doozy. Big, huge. 544% increase from $18.40 to $118.50 over a span of 48 months. Number four, it had a 12-month gain, 40% gain. So relatively low there. 1247 to 1748. Not really that much measure there, really, to speak of. For 27 months, from 93 to 95, there was a 39% gain. A micro bull from $6.47 to $9. Then here, a 113-month span from $6.01 all the way up to $55.69, and a 127% increase. But this shows it at $49.50. I think that might be an error there, because this is correct. This number is correct. I think they did have an error there. That must have been the real price, the nominal price, and the inflation-adjusted price, which is the real price, was really $55.69. I think that we found an error in this infographic. Number seven is ongoing for 56 months from 2015 to 2020. With a 90% increase from $15.04 to $28.53. So there you go. Interesting indeed. And I think there's an error there. Although, yeah, I think there's another error right there. So here we go. So now we look at some other graphs. Silver bar charts here. Silver has outperformed gold in 5 of the previous 6 bull runs. So there you go. And just 5 of them it has outperformed. Will silver prove itself once again in the current bull run? We shall see. So here we can see silver has outperformed gold in all but one bull market for gold. We can clearly see that. If we look at this, I'm not sure what the grayish and the white means. Silver using the same dates for peaks and troughs. Silver using silver's peaks and troughs. So I'm not really sure exactly what that means. I guess it's some sort of metric measure of time. But there you see, in the 1971 to 74 bull run, gold outperformed. Every other one, silver did. Although in this little micro one, it was only barely. There from 2001 and 2011, yes, silver definitely did outperform. But from 2015 to 2020, it looks like a repeat of the micro bull run. Gold has outperformed silver so far. And it could continue to be that way, which is why I always tell people to diversify into some gold, because I didn't realize that there was this other measure of a bull run that gold had outperformed silver. And that could happen again this time, although even though we're showing this 5-year span, really, we're just now starting to see the effects of it now. So we get into here a very interesting infographic. We'll finish this out by looking and reminding ourselves about the uses of silver as a renewable and industrial metal. That's going to play a part into how its price is measured and how the metal is seen. It's utilized in electronics. It has the highest electrical and thermal conductivity of all the metals. It's household electronics such as televisions, LEDs, microwaves, and refrigerators to improve efficiency. Silver is used in contact with and membrane switches, and so it's got a lot of uses out there. It's got a lot of great uses in healthcare. During the bubonic plagues, family used silver utensils were more likely to survive. They could put a silver coin in milk to prevent it from spoiling. Silver is able to kill 99.9% of pathogens in water. Silver coins were dropped in milk to preserve it longer. Silver can treat wounds and infections, antimicrobial action against yeast, molds, and bacteria. Silver nanoparticles are used in eye drops to treat infections. Fabrics with nanoparticles of silver can kill bacteria, and it can be used for catheters, prosthetic heart valves, and other implantation devices. Silver is very much a key in renewable energy. It's a key ingredient in photovoltaics and solar energy. The solar paste in those cells convert thermal energy from the sun to an electrical current. An average solar panel uses about 20 grams of silver. That's right. In fact, the ones I have about 27 grams of silver per panel. 2019 alone, 100 million ounces of silver was used for photovoltaics. Silver's history shows its value as an investment, but its practical use dominates silver demand. That's the thing we got to keep in mind for those of us who are stacking the precious metal. It is mainly seen, and rightfully so, as an industrialized metal. So 511 million ounces go towards industrial uses. 992 million ounces of total silver demand in 2019 from the Silver Institute. So more than half of this pie is from photovoltaics and industry. And then photography still has a good chunk at 34 million ounces. So well over that half of the pie there. And then when you look at jewelry, that's another 201 million ounces. Silverware at 60 million ounces. And net physical announcement only accounts for 108 million ounces there. As its industrial and technological applications continue to grow, silver remains a safe haven investment from political uncertainty and economic distress, while being a cheaper alternative to gold. However, as you know, I do not like to look at silver as an investment. No way, shape, or form. Unless you're looking at it from the pure stock side or ETF side, and you can run it in that regard. But when you're stacking the physical, you got to look at it for the long-term holding, for sure. That's really what it's about, holding it for the long term, although obviously there are exceptions to the rule where people can buy higher premium silver coins that are hot commodities at a particular time and sell them for profit. I'm not talking about that. I'm talking about as a hedge. When you look at something as a hedge, you don't look at it as an investment. You look at it as an insurance policy. Big difference between the two. So there you have it. Very interesting data here in this infographic. Post your thoughts below. Would like to extend a huge multitude. Of course, that's redundant because a multitude, by definition, means it's a lot. It's huge. Of gratitude to you all for taking the time to watch this video, and encourage you to please rate, share, comment, and subscribe.